Don't click buy on that ETF yet. The upcoming rebalance could come with hidden costs most investors never see. You could lose thousands if you don't time it right. This video will reveal how ETF rebalancing can quietly chip away at your returns and how to avoid paying that hidden cost. Whether you're investing in QQQ, SPY, or any Russell or MSCI-based ETF, this one insight could help you keep more of your money. ETF rebalancing is a crucial event in the market, yet most investors aren't even aware of it, and it matters more than you realize. It happens regularly, either quarterly or semi-annually, for major index tracking ETFs. Why does it happen? Over time, a few stocks within an index and thus in the ETF can grow so large they dominate the entire portfolio. Rebalancing is like rearranging the basket so no single item gets too heavy and tips the whole thing over. It ensures the ETF accurately reflects its underlying index and maintains diversification rules. But here's the hidden cost of rebalancing. Since rebalance dates are publicly known, big institutional traders often anticipate what ETFs are forced to buy and sell. This means ETFs sometimes end up buying stocks at temporarily inflated prices or selling them at depressed prices as they adjust their holdings. That subtle inefficiency, multiplied by billions of dollars, can chip away at returns, costing investors thousands if they buy in at the wrong time. Take the Nasdaq 100 index in July 2023, for example. The index tracked by QQQ had to rebalance because 7 tech giants, Microsoft, Apple, Nvidia, Amazon, Tesla, Meta, and Alphabet, made up over 50% of the index. This overconcentration forced Nasdaq to announce a special rebalance. Fund managers were compelled to sell off some of those big stocks and buy more of the smaller companies within the index. This led to a temporary price shakeup. The prices of the big stocks saw downward pressure, while the smaller stocks saw upward pressure. Investors who bought the ETF during that window likely paid a hidden cost, not because the ETF was bad, but because they walked into a volatile moment. Now, another round of major ETF rebalancing is happening this month, June 2025. Don't rush to buy some of these popular ETFs before you understand the timing. Wait for the dust to settle and allow the market to digest these changes more cleanly. First up, the Russell US Index's annual reconstitution. This is the biggest and most anticipated rebalancing event in June, impacting thousands of stocks. The FTSE Russell annually reconstitutes its entire suite of US equity indexes to reflect market changes. This means adding and removing companies and adjusting weights. The lockdown period for this rebalance began on June 9th. The reconstitution itself becomes final after market close on Friday, June 27th, 2025, with the newly reconstituted indexes effective on Monday, June 30th, 2025. Any ETF that tracks a Russell US index will undergo a rebalance to align with this new composition. These include popular ETFs like IWM, VTWG, IWB, VONE, IWV, VTHR, and many other specialized ETFs tracking Russell sub-indexes like Russell 2000 Growth or Value. Next, the S&P Dow Jones Indices quarterly rebalance. These indexes, which manage the S&P 500, S&P 400 Mid-Cap, and S&P 600 Small Cap, also have a scheduled rebalance for June 20th, 2025. Any ETF that tracks these S&P Dow Jones Indices will adjust its holdings. This impacts major ETFs like SPY, VUO, IVV, IJH, IJR, and many sector-specific SPDR ETFs like XLK for tech, XLF for financials, XLE for energy are also indirectly affected. Let's look at the recent rebalancing that just wrapped up in May and how it affected major ETFs, giving us a fresh example of these hidden costs. MSCI, Morgan Stanley Capital International, had their rebalancing review announced on May 13th with changes effective at the close of May 30th. This saw 30 securities added and 61 deleted from the MSCI ACWI index alone. Many ETFs such as SWDA, IEMG, ACWI, and IEFA, along with numerous other country-specific or regional MSCI-based ETFs, were directly affected. During the period around the rebalance announcement and the effective date, there was a significant increase in trading activity and price distortions in the individual stocks being added or removed. If you bought an ETF like IEMG or ACWI exactly during that highest churn, you might have absorbed some of those hidden costs. These include the ETF's internal trading expenses and any slight adverse price movements on its constituent stocks due to their forced buying or selling. So, how do you avoid these hidden costs and ensure you buy your ETFs at the right price? To avoid buying at inflated prices or getting caught in short-term volatility, always confirm the exact rebalancing dates and any potential constituent changes for a specific ETF. Wait a few days after the rebalance date before buying. Let the dust settle. If you want to avoid hidden costs and buy your ETFs at the right price, always check their rebalance schedule and let the market settle. But if you're a busy investor who doesn't have time to track all this, hit that subscribe button now. We'll keep you updated and share smart, time-saving strategies to help you invest smarter, not harder.